Ladies and gentlemen, welcome. If you're new to this channel, let me tell you how things work around here. I'm going to say some things about the market and stocks. The market will then do those things. You'll make some money, I'll get some views, everybody's a winner. So like and subscribe, hug your mother, let's dive in. Welcome everybody to the Daily Recap Show where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500 and US stocks were mostly green on Tuesday as the S&P 500 closed above 6,400 for the first time ever amid a broad stock market rally as Wall Street digested fresh inflation data and stocks were green led by the mega caps. Nvidia was green, underperformed the broad semiconductor trade, and what we really saw was a rotation away from Nvidia into AMD, Qualcomm, ABGO, Texas Instruments, even the equipment manufacturers right here and the hardware equipment manufacturers, stuff like Dell, Arista Networks, SM, the CI. Software kind of making a move back after yesterday's brutal sell-off, but software as a whole underperformed the broad market. We saw infrastructure was probably the most bullish side of tech. Apple gained 1%. Amazon and Tesla were weak, weighing on the discretionary space, but green nonetheless across the board, and the broader discretionary space actually very, very green, led by bookings, CMG, RCL, Airbnb. We saw communication services, Google and Meta, up 1.49 and 3.05% respectively. Netflix, Disney, T-Mobile, the telecoms, they all participated as well. Industrials, very, very green as well. Through and through, it was just a green day everywhere. Every single sector gained today, and it was led by cyclical and sensitive sectors. Look at this, XLC up nearly 2% on the back of Meta and Google rallying. XLK on the back of just tech doing its thing, and the S&P 500 up 1.06%. This is actually a very, very bullish day, coming off even a bullish week of what we saw last week and yesterday's digestion. And you can see, look at the defensive sectors, XLU, XLP, XLRE, GLD. These were at the bottom of the heap. What we saw was a rotation out of safe haven assets, out of defensive assets, into cyclicals, into sensitives, into anything that would benefit from lower inflation and stronger economic growth. And we actually saw small caps outperform the broad market. Small cap growth, core, and value, all of these segments were up in excess of 2%. Mid caps were the second best sector, led by the value and core components of the market, but growth was no slouch, and then large cap growth outperformed here on the large cap side, but core and value underperformed, but still a very solid day here for value, a very solid day for core, just a broad-based day across factors, across size segments, even across geographies. I mean, Europe was a little bit mixed, but North America was very, very solid. South America was very, very solid. Excluding India, right? Asia, Southeast Asia, Australasia, very, very solid day. South Africa, solid day. The Middle East had a very solid move. Incredibly bullish day for the markets, and it all stemmed off the US inflation data. Now, if you actually look at the core figures, right, the actual here came in at 3.1% versus 3%. But when you look at the headline figures, the actual figures, which everybody looks at, 2.7% versus 2.8%. This came in cooler than expected. So we got a hotter than expected number and a cooler than expected number. But I think the market just really looked at this simply because this core inflation, right, it excludes energy and food services, whereas this is just the raw inflation details as they come. The market looked at that, and if you give the market a reason to rally, the market is going to rally. I think what also helped the tech space today was some commentary we got from Sam Altman. Now, pretty much he's going on about how compute demand is evolving. This is the sentence you want to read right here. He said, "We are looking to double our compute fleet over the next 5 months." So pretty much they are still supply constrained. And we know this to be true because CoreWeave dropped their earnings after the bell. Now, they beat on the top line, beat on the bottom line. The stock was priced to perfection coming in, so it is down a little bit here in the after hours, but it was up 6% today, so net zero. But the crazy thing is, CoreWeave's revenue backlog increased from 25 billion to 30 billion, right? And that was led by an expansion of the current OpenAI deal, which sees OpenAI expanding their deal with CoreWeave by $4 billion, taking it to $16 billion in total. CoreWeave also signed a new hyperscaler customer, and revenue grew 206% on a year-over-year basis. Contracted power increased by 600 megawatts to 2.2 gigawatts. Guys, I think any dips in this name need to be bought. The stock's going back to all-time highs at the 180, 190 level. These were actually like really, really good earnings. And I think this is an opportunity to buy the dip. I think CoreWeave is going back to all-time highs. Now, Circle Internet Group also reported their earnings. They were up 1%, they were up as much as 12% at the open, down 7% in the after hours. So this is a super volatile stock, but they missed on EPS, beat revenue. Now, USD supply increased 90% year over year. Total revenue was up 53% year over year, and net losses came in at 482 million. But their guidance was absolutely crazy. Have a look at this right here. They guided for a 40% CAGR in USD circulation over multiple years. You're looking at a business that is growing so incredibly fast. And I think the more crypto adoption we get, there could even be upside to this number. The management team on the earnings call and on CNBC said, we're looking to grow 40 to 60%. We just guided for the lower end of the range. And guys, I have a full breakdown of Circle Internet Group stock right here on my channel. So you guys go ahead, check that out right now. And I'm also going to do a CoreWeave update today. So like and subscribe to my second channel to get those updates immediately. And then for everything we saw today, there were 4,700 advances, 1,600 decliners. Great breadth here in the market. You could see absolutely fantastic breadth. Now, net outflows were true for the Nasdaq 100 and the New York Stock Exchange. However, this was intraday. If you actually look at the gap up at the open, it would have been a day of net inflows with the S&P 500 up 1.13%. And market momentum is back in the green, baby. Everything from the 5-day to the 200 days above the 50% mark. And when you see this type of momentum, it often means prices, stocks, and the markets can go higher because we're seeing broad participation and broad market momentum. Now, guys, looking at the charts, you can see the S&P 500 right here was up 1.13%. Equities were broadly green, led by small caps. Look at profitable small caps, up 3% on the day. The RTY, 3% as well. Mid caps outperformed, the RSP outperformed, but mega caps no slouch either, up 1.3% respectively. And that, again, is just on the back of that inflation data. Now, on the inflation data, you can see right here, when we actually look at yields, the 10-year and 30-year yield increase, but the 2-year yield actually decreased. So inflation expectations in the near term, the 2-year yield, the shorter end of the curve, which is essentially what the Fed controls, is the market is telling the Fed, hey, you have the opportunity to cut because the labor market data came in weak. And we also got inflation data that supports a cut. That is like the Goldilocks scenario for Jerome Powell in September. I think more likely than not, we are probably going to go ahead and get that rate cut at the end of the day. Now, futures, yeah, not looking too good in the after hours, but it doesn't really matter. You know, the new mug just opened and you could see broadly green internationally, Europe, China, the Middle East, everything was just broad-based rally. But, you know, our performance here from US equities for the most part, as well as Chinese equities. Cryptocurrency on the back of that inflation data was really, really strong. I mean, if we get rate cuts, easier monetary policy, crypto, which is essentially a hedge against money supply and debasement, is going to rally. Look at Ethereum. You know, we've been bullish Ethereum. Pretty much broke this 4,000 level and it's rallying. I think we're going to see all-time highs by the end of the month here for Ethereum. All-time highs is at the 5,000 area, just under the 5,000 area. And then Bitcoin up 1% today, holding this, you know, high teens level. Very, very solid stuff. We'll talk about both of those a little bit later on. Volatility ticked down. We spoke about yields. The dollar was down in a very big way, down 0.42%, half a percentage point. As a result of the movement we saw in yields, TLT was down, and then we saw gold and silver up ever so slightly here on the new day. But, you know, gold was down 1.66% for the day, and then silver was down 1.86%. So yeah, not a good day for safe haven assets. Great day for risk. A great day for risk assets. So the reason why we are seeing a little bit of movement here in the after hours has to probably do with CoreWeave's earnings. You could see the conference call just started there for CoreWeave. The stock is down about 11% here in the after hours at the 133 mark. But I still believe this is a solid buying opportunity. And you can see a really good basis formed right here for CoreWeave at the 105, 102 area. I think if we do get there again, that would be an opportunity to buy the dip because I do think we're probably going to see all-time highs for CoreWeave, in my personal opinion. You could maybe even sell cash secured puts at this level right here if we do get there. But all in all, I think this is a dip buying opportunity. Right now, CoreWeave is telling you that demand for AI will continue into the foreseeable future. Their backlog increased by another 5 billion. And I mean, the AI trade looks poised to run. And if that's going to continue, the market's going to continue pricing in really, really frothy multiples for these companies. That's going to be led by, the market as a whole, the S&P 500 and the Nasdaq 100, which both made new all-time highs. You can see that's a daily new all-time closing high for the S&P 500, closing above 6,400 for the first time ever. And we saw the core wall move up to the 6,500 area as well. The gamma flip also moved up and it put support. That's very, very positive. The options market is pretty much telling you that we will go higher. And ultimately, we've been following this very weird trend where we have a red day, green day, red day, green day, red day, green day, red day, green day. I mean, today we had a green day, so maybe a red day tomorrow. But I think ultimately these are just dips that you want to buy, looking for us to go higher. This has been an unabated rally to the upside in the S&P 500 as well as the Nasdaq 100. Absolutely crazy when you think of where multiples are and the fact that we're just rallying. And the reason why we're seeing this momentum just has to do with earnings. Earnings are coming in significantly better than the market expects. Look at even CoreWeave. They beat on their EPS estimates. I think they beat by 15%. They were supposed to report negative 32 cents in earnings per share. They reported negative 21. Very, very solid stuff from the market. And we'll see if that continues into Q3. But right now, the market's rallying on the fundamental picture of earnings as well as rate cuts because of the inflation data and the labor market data. And that's just really good for equities. When you have GDP growing, the economy growing, and the Fed cutting into that, equities do really, really well in that type of environment. And we're seeing it right now. This is a very resilient market. All dips are just being scooped up immediately and we continue to make higher highs. I don't know, you can't really fault this market at all. Now let's actually go ahead and look. At the Russell 2000 because this was actually the outperformer here today. And it looks like we actually got above this congestion zone right here, and we can target the top end of 30, 23, 25, this top end of the range right here, which is this congestion zone right here. I do think we're probably going to go ahead and get there. And, the small cap index at Russell 2000 looks very, very strong. Same with the S&P 600 looks very, very strong. They look very, very similar. I think ultimately we go higher. I think we can go ahead, target these highs in the S&P 600 of the 1465 area and potentially the 1550 area if we do go higher. Now, let's actually look at Ethereum really quickly, look at just where we are right now. And this is officially a breakup. We've broken above this key level right here. And now this is the weekly chart, guys. We're going to go target these all-time highs. That all-time highs is just under the 5,000 area. I think we're going to see that even maybe before the end of the week. Very, very strong. And, my game plan was if we break above this area right here, we're going to look for consolidation and then a move up. We got 2 days of consolidation and now we're continuing the move up. I think 5,000 is on the table and 7,000 before the end of the year. And I think all pullbacks in Ethereum need to be bought as well as Bitcoin. Although I do think Ethereum is going to outperform. And we know that to be the truth. If we look at Bitcoin dominance, which is essentially Bitcoin's market cap, that has actually been falling. And the reason for that is because Ethereum has been rallying very, very strong. So Bitcoin's dominance is now sitting at about 59%, 60%. Ethereum is the second biggest cryptocurrency, and that is off a high of 66%, purely on the fact of Ethereum rallying. Now, Bitcoin will continue to move high. M2 money supply does give us a target of about 135 to 140,000. And I do think that if we go ahead here for Bitcoin and we actually go ahead and break above these highs right here, it opens up the 130, 135, 140,000 area for us. And it does look like this was the absolute buying opportunity for us to move higher. Strong momentum in the crypto space, a strong momentum in equities. And again, it all stems off rate cuts, that inflation data, and just this really frothy market conditions that we have right now. If we go ahead and look at the 2-year yield, you can see the market is telling you that the Fed need to cut the 2-year yield at 3.7%. Fed funds is at 4 to 4.5. So essentially the market is telling the Fed, hey, you need to cut anywhere from 50 to 75 basis points, sort of to normalize current market policy. I think we probably will get a 25 basis cut in September. Trump would want a 50. I don't think the Fed is going to do 50, just to give them some optionality into the end of the year and to assess more data. And then quickly looking at the dollar, we continue to sort of form like a base here at the lows. I am still technically bullish on the dollar, but if the data continues to come out as it has as of late, we are going to see a little bit of weakness, and we could see a retest here of this $97 area. However, structurally, I do think we're going to see strength in the dollar into the end of the year. But guys, I think the best plays in the market right now is definitely Ethereum. This has momentum. Buy on pullbacks. I definitely think Bitcoin structurally, M2 money supply is telling us we will go higher. And in terms of like individual equity names that I do like right now, I'm a big fan of just anything related to AI, NBIS. You guys know I've been bullish on this name for a very, very long time. I actually do like CoreWeave as well. I think the opportunity here to buy the dip on this 10% pullback. And I also like the stock Lemonade, ticker symbol LMND. This is a great company. And again, any pullbacks we do get in this market, anything below the $50 mark, buy those dips because we will go higher into the end of the year. I dare say this could be a $75 company by the end of the year. Now, guys, let's talk about sentiment. The fear and greed index is here at 58, which shows the market is leaning ever so slightly into greed, reinforcing bullish momentum as optimism fuels buying pressure. This sentiment can drive prices higher in the short term, but if this continues to push into the greed zone, guys, and even further into extreme greed over the next couple of days, maybe into the end of August, the market risks creating very frothy conditions where valuations outpace fundamentals. And in such cases, even minor negative catalysts can trigger sharp pullbacks, especially in periods where, seasonally speaking, the seasonals are not in favor of us going higher. In time periods like this, we just ignore all of the negative data and we climb the wall of worry. But when the seasonals tell us that we can see a little bit of downside, the market looks for any reason to sell. And if we get that, we can definitely see a pullback. So do expect choppiness. I'm not saying we're going to have a massive, massive crash, right? But we can definitely get a correction in price, as you see right here, or a correction in time. However, guys, we are looking for a bottom to be put in circa around later this year, maybe November, maybe late October, potentially even as late as early December. And once we put in that bottom, we're looking for an end of year rally. But in the year end now, we're looking for a little bit of digestion, and we are probably starting to see that in the fundamentals. When we actually look at the one-day post-reporting performance, when companies have missed earnings, they are getting sold off more than usual. In fact, this is some of the worst data we've seen ever going back to the year 2000. And companies that are beating on both are actually not being rewarded that much. This is telling us that valuations are probably a bit frothy right now, and we do need a healthy reset. Coupled with the seasonals where they are, if we do get a pullback, call it a garden variety pullback, anywhere from 5 to 10%, take that as an opportunity to load up and buy the dip, because ultimately the macro is holding up there. When we look at the core driver of GDP, the consumer, I just don't see the consumer pulling back. I mean, when you look at the US Red Book Index, which is a weekly aggregate of retail sales, last week we printed a number of 6.5%, guys. Absolutely insane. You might even think these numbers here were declining, and they were, don't get me wrong. However, this number right here is still like 4.8, 4.9% year-over-year growth for the week. Right here, 5.1%. This right here, 5.2%. This right here is 5.9%. So absolutely insane stuff. The consumer continues to spend, and that has been the case for the better part of the last 3 to 4 months. You could see here that we did have a little bit of dips as we did get some tariff uncertainty, some buying periods as well. However, the consumer continues to remain strong. And again, this is a weekly aggregate. So if we are starting to see a pull forward, but we're definitely not seeing is sort of that slowdown that would come from a pull forward. In fact, what you could actually saying is we're seeing a little bit of an acceleration here after the numbers we got last week. And at the same time, federal employment tax receipts clocking in at 7.8%. This is data up until the 8th of August. So we only get these a week at a time, right? So they can be delayed. However, very solid stuff right here. And again, this data is not signaling to me that there's any concern with the labor market and by extension, the consumer. Now looking at data, tomorrow, the biggest data number we're going to be looking at is PPI. We already got the inflation data right here, and the consensus for that is for 0.2%, the forecast 0.2% as well. So hopefully we get a cool PPI print, and then we actually get the retail sales numbers. And then looking at earnings tomorrow, we have two big names right here, Cisco and D-Local. I think I'm going to cover D-Lo here on the second channel, guys. But if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit the notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.